from their ancient origins deep within the earth to their modern role as symbols of wealth and beauty. This documentary uncovers the science, history, and market dynamics behind these natural treasures. Explore how passion meets profit in a market where rarity and brilliance define value, offering a unique glimpse into the art and business of gemstones.
Emerging markets and their investment potential. Growth potential. Emerging markets grow faster than developed markets due to industrialization and global economic integration. Opportunities exist in infrastructure, telecommunications, manufacturing, and consumer goods. The growing middle class fuels demand for products and services like healthcare and technology. Diversification. Investing in emerging markets helps diversify portfolios, reducing exposure to risks in a single market. Economic downturns in one region can be offset by growth in others. Political instability. Political uncertainty in emerging economies can lead to abrupt policy changes or asset expropriation, requiring vigilance and adaptability from investors. Economic volatility. Emerging markets experience rapid fluctuations due to factors like commodity price changes, foreign investment shifts, and currency instability. Risk management strategies are essential. Legal and regulatory challenges, underdeveloped or frequently changing legal frameworks make compliance difficult. Companies must invest in legal expertise to navigate these challenges. Innovation opportunities, infrastructure development, and rising consumer demand offer opportunities for innovation, particularly in sustainable and tech-driven solutions. Digital leapfrogging. Emerging markets often bypass traditional technology stages, mobile banking, and present opportunities for tech companies to introduce products for a tech-savvy demographic. Predicted trends in consumer demand, sustainability, and ethical consumption. Consumers increasingly favor eco-friendly and ethically produced goods. Companies that prioritize sustainability will attract loyal customers. Personalization and customization. Advances in technology allow for mass customization, with consumers seeking products tailored to their preferences. Data analytics and machine learning help businesses create personalized offerings. Health and wellness. Consumers are prioritizing health, driving demand for fitness, wellness apps, healthy eating, and mental health services. Companies integrating health into their offerings will see growth. Technology integration. Smart devices and IoT-enabled appliances are becoming integral to daily life. Consumers expect seamless integration across their devices. Experience over ownership. Younger generations favor experiences over owning physical goods. Subscription services, rentals, and the sharing economy are growing, and businesses offering memorable experiences will benefit. Social responsibility. Consumers are increasingly supporting brands that demonstrate social responsibility. Companies engaging in community building and ethical practices can enhance their reputation and customer loyalty. These trends reflect a shift towards conscientious consumption, where quality, ethics, and social impact are as important as price and convenience. Companies that adapt to these preferences will thrive. Preparing for economic fluctuations. Understanding the economic cycle. Recognize the phases, growth, peak, contraction, and trough of the economy to anticipate challenges and opportunities. Diversification. Spread risks by diversifying product lines, markets, supply chains, and investments to protect against downturns. Liquidity management. Ensure sufficient liquid assets to cover short-term liabilities and unexpected expenses, both for businesses and individuals. Cost control. Businesses should adjust costs quickly during downturns, such as by cutting non-essential expenses or improving operational efficiency. Individuals should maintain an emergency fund. Investment in innovation and technology. Automation and tech can improve productivity, reduce costs, and make businesses more resilient. Adaptability. Stay updated on economic trends and indicators to adapt strategies and decision-making. Risk management. Develop strategies to manage potential risks through insurance, hedging, or contingency plans. Communication. Maintain open and transparent communication with stakeholders to build trust and loyalty during tough times. Long-term outlook and strategic planning. Clear vision and goals. Define where you want to be in the long term, 5, 10, or 20 years, and set goals to guide strategic decisions. SWOT analysis. Assess strengths, weaknesses, opportunities, and threats to inform strategic decisions based on internal and external factors. Flexibility. Adapt plans to changes in technology, economic conditions, and personal circumstances. Regularly review and adjust strategies. Risk management. Identify potential risks and develop mitigation strategies, such as diversifying revenue streams for businesses or building emergency funds for individuals. Investment in resources. Invest in new technologies, research, and human capital to drive growth and innovation for businesses. For individuals, invest in education and personal development. Measurement and evaluation. Set measurable goals and track progress to adjust strategies and improve long-term success. Effective communication. Ensure all stakeholders are aligned with the strategic plan and support it. For individuals, discuss goals with mentors, family, or advisors to get guidance. Strategic planning requires a long-term vision, flexibility to adapt, and continuous evaluation to achieve sustainable success, both for businesses and individuals. As we conclude, remember that each gemstone is a piece of the Earth's story, a sparkling testament to the wonders of our natural world. Treasure it, and let it inspire your path forward in the shimmering world of gemstones.